What's up, Thomas? Yeah, so one thing that I'm taking a look at and also being mindful of, I posted earlier in MPix about um, the NFP tomorrow. For those of you who don't know what that is, it's just it's a financial announcement in a nutshell that goes over employment other than farm jobs and government jobs, and depending on if we meet expectations or not, it can be extremely have a very big impact on all financial markets that are denominated by the US dollar. For instance, Forex traders, a lot of them don't even trade these events. They're in the first Friday of every month. And, and if maybe say if the dollar is bearish, right, then we're going to have a bullish move on any kind of currency or asset that is denominated by the dollar. So it's definitely something you want to keep in mind. Forex and crypto are starting to move more and more in a similar manner. So, if we think that the dollar may fall pretty hard, then we need to be mindful of that whenever we're looking to execute trades on days when those announcements come out. Like I said, a lot of people don't even trade these days. Um, I wouldn't recommend opening trades right before it. If you're in trades already, de-risk yourself for sure, regardless of where it's at. Maybe take some profits. Um, but I do want to go over that. So, really, the way I see it, so if we're expecting a pretty bearish reaction to the dollar, um, people that are trading pairs against the dollar, whether it's Forex or crypto, could expect anything denominated by the dollar to see an up move. For instance, if we look at the dollar and we see, let's mark both charts up. So let's just go to euro dollar. I know this is crypto. I just want to give you guys an example. Go to both on the 4-hour. Sorry, the 4-hour. So we'll see that oftentimes, for instance, let's go. I'll make it to where my cursor is on both. So let's look. When we see a big down move here, what do we see up here? We see an up move. So you're going to be able to use the DXY, it's the US dollar index, as kind of a, you can use it as confluence to enter or exit trades, confluence to not trade. It's just definitely something you need to be mindful of. So for instance, if we're expecting okay, this is euro dollar. So it's, the euro against the dollar. So if we see the dollar fall, we're going to see the euro against it rise, even if the euro is not gaining any value. It's solely because it's denominated by the dollar. So we have to look at Bitcoin, Ethereum, everything we trade. tether is the dollar, just it's peg of the dollar. So if we are trading an asset that is denominated by the dollar, it's important to be aware of potential moves the dollar might make. You know, overall, the dollar looks pretty bullish, if you ask me, on a high time frame perspective. But as we all know, after we get these breaks of structure, we can expect a pullback. Where do we expect a pullback to? Maybe it's this demand. And again, we cannot bet on this. We need to wait until it unfolds. But maybe it's this demand. We're starting to form an inside bar. You might see the dollar just fall a little bit, consolidate. Who knows? The NFP may be better than is projected, but I know they announced that private payrolls increased only by 128,000, which is the lowest gain of this entire pandemic era. So that's not going to be good at all. That's a sign of weakness in the economy, which is going to translate to a fall in value of the currency. So maybe we are looking to an area down here. And I know some of you guys are watching and saying that TA, how you doing TA on the dollar? I promise you, go back and back test it if you're doing smart money. But we could expect a fall here. So for those of you that are really anxious to short crypto, believe me, we're going to go over why I want to short too. I do. But you need to be very mindful of what that DXY falling can do. You could have the best TA in the world, and in reality, it might be just a setup to create liquidity. And then the dollar does the exact opposite of what you need it to do, and your TA is no more. So you need to understand the context of the workspace you're in. So I just wanted to start off by telling you guys that don't sleep on that. You can sit it out, wait till after. If you're, like I said, if you're in trades, manage them, de-risk. But overall, sentiment on crypto, I think you guys are probably not going to be surprised at this. Is for me, it's pretty bearish as of now. Now, when we are navigating markets as a professional trader, you cannot have a emotionally convicted perspective. And what I mean by that is, you can't. I love crypto. I'm bullish on it long term. I think it has a lot of great use cases. I think that crypto is going to change the world in a lot of ways. It already has in some ways. But as a trader, I look at this chart and I do not see any confirmation of a shift in trend. Now there is a bull case, the case that for people that study Wyckoff, saying that this is really just the beginning of phase B in accumulation, which the end game goal of phase B is for the market makers to exhaust retail traders and gain more control of the market before pushing to the upside. Now that is a possibility. We are under. I see that case. We are under all old lows since 2020. Everything we've cleared out or 2021. I'm sorry, not 2020. Since 2021, we've cleared out all this liquidity on the high time frames. You could look for signs of a reversal here, and we just might see it. But for me, and everybody has a different framework for whatever they need to happen in order for them to be bullish. For me, there's nothing changed here. I'll go to a different feed. There's nothing changed about this trade, or I'm sorry about this. Let's see that long position. There's nothing changed about this trend to make me think we're bullish. Now, why? Because a lot of people, and it's way more simple than you think. And this is how you can develop a very, very easy framework for whether you're bullish or not. So, of course, you want to look at the higher time frames. On the weekly, you can't really say we're completely bullish at all here, in my opinion, because before, what were your swing low and your swing high? This was it. Now, on this exchange, I don't think it has, but I know that on some exchange, we closed a week under this low. So when we're using swing structure, people often misinterpret swing structure as something like every big move is a swing. Like they'll draw, every single one of these moves, is a swing. Anything that has significant movement is going to be a swing to them. That's just not the case. So because whenever we're looking at market structure, we have to remember that a low has one job and a high has one job, and that is to make one of another or one of each other. For instance, if we have a low, its job is to make a high. Until it's fulfilled its job, it's not a swing low, and vice versa with highs. So when we look at the market structure we have, you can't start over here and say, okay, here's this, here's our swing high. Oh, we were bullish again. I've seen people doing that. They'll go like this. They'll say, okay, shit, I'm gonna draw that one, but they'll say this. I saw this on Twitter, and it's just like that's not right. It's just simply not right. There's no opinion on that. There's no, um, you know, oh, this is my style. It's just not right, right? Because why? This hasn't this isn't a high, so we haven't broke any highs on the high time frame. So when we look at the high time frame, we look that it's pretty obvious here. We don't have to go all the way left to know that this down here is a new realm than we are in up here. So you could say you had this high here. Okay, you made a new low down here, made a new high, you made a new low here. I wouldn't consider this a swing. So where did you actually see a decent pullback? Right here. So then what? Now here's your low. Now, what about this is bullish? No matter how you draw structure, we haven't even wicked that high. And whenever we're trading, we have to look at the market from a perspective of what is and not what we're speculating. Now, I do see the bull case. 100%. I do see it, but I cannot act based off of that until I have proof of that. And what is proof of that? It's very simple. This is where everybody's like, how do you know if you're bullish or bearish? Are we making higher highs and higher lows or vice versa? Here, we're making a very clear downtrend. Now, until that is shifted, I'm not bullish. It's that simple, and that will take the thought out of this for a lot of you who, have that confusion, or you're not, 100% confident in your perspective of the market. You're biased. This is what we talk about when we say we're building our high time frame bias. So we have to think of order flow as what we have. We cannot speculate as traders. You're a gambler. When you're a speculator, that is gambling. That's the difference between trading and gambling. So we have to go with the expectation that this is going to continue. So we look at this high as a strong high. I know some people in chat are asking this today. So why is this a strong high? Well, it did its job, created a new low. That's simple. Why is this a weak low? It hasn't made a new high. All these are weak lows. So when we're trading with the trend, you want to get into trades at the lower high, as long as it's formed. Now, one thing I do want to be really clear on is that all trends are broken. By any means, am I just married to the bear perspective? Absolutely not. Like I said before, as a trader, you have to go with what you have in front of you. And you can't get emotionally attached. Now, do I want to be bullish on crypto? Would I rather crypto look like it's going to 100,000 this year? Fuck yeah. Because then we can all make a ton of money off just holding equity. But until I have a logical reason to think that way, you can't think that way. That's the way I see it. So until then, we assume that this is a strong high. And we went over why it's a strong high technically, but also you can look at it from the perspective that it took a lot of money to push this down and break this low. So whenever a lot of money enters the market at one area, maybe they're selling, short selling, then what are they going to do with this high? Because this is where they got in most of their positions. Are they going to let prices blast through their positions? Well, at some point, like I said, all trends change, but we have to assume until they do, this is going to be a protected high in the high time frames. Now, this same concept can be applied through every time frame, but with more time, you're going to have much more power in your TA. You're going to have a better um, probability of this remaining a strong high. So what do we do when we're trading with the trend? Well, if you're trading with any of these trends, where was the absolute best place to get in? Like for instance, we'll say, where was the best place to get in this range? If you're shorting, because I mean, you could say here and long, but let's see which was the better move, here to here, or here to here, or wherever you ended up taking your profits. Obviously we can see that trading with the trend over time, is going to be more profitable. Now, you can trade counter trend, of course. I'm not saying you can't. We do that all the time. But when we're looking at the high time frame narrative, what is the story that price is trying to tell us? We have to go with what we have. So for instance, in here, tons of people were bullish. They were buying all the way through up here. What happened? It just ended up being redistribution. People got left in the dirt. People are losing money like crazy. They're also developing bad habits. They're fucking up their mindset. But it's all just because of a speculative hope and desire rather than going with what they have in front of them. While the people who understand this concept were totally okay with waiting until we get up here, looking for those signs of a reversal, and then position themselves accordingly. So you can see that it seems like this high is definitely being protected. We got up here, very huge, fast, animated move up into our level. Oftentimes, you'll see that whenever you're trading smart money. For those of you who already trade it profitably, you know that a lot of times you're going to see price move very violently into your POI, and it might scare you when you're starting, but that's what you want to see. As a supply and demand or smart money, whatever you want to call it, as that kind of trader, you want to see that displacement going into your zone because then you can know that large money had interest to push price to that zone. Now, I know some of you guys have gone through, price blasting through your stop loss. That happens as well. But whenever you see price move with displacement to your entry and then react with displacement, that's when you can start to build more confirmation that, your expectation was correct. So when we look at crypto here, like I said, I see the accumulation narrative. I see it, and if we can confirm a high above here, I'm all for it. Start to look for longs, right? But the way I see it, we can you could draw this whole zone as supply and demand. That's a huge zone. Now, did we see reaction to it a ton of times? Here, every time we came into this zone, you saw reactions. You were engineering liquidity to the upside. Everybody was going short. Oh, this is the top. Stops losses here. They probably didn't take anything. Bam. Same thing. It's just engineering liquidity. So once we finally came up and absorbed all of this supply, this is where you want to maybe refine your zone. See, what do we really react off of? So you could do just the last candle if you wanted. This is how you'd start. You could say just this whole candle. Now you look, we tapped through this. We still saw the reaction, but you went through this zone. And I know a lot of you who learned order blocks, you have a more black and white view of what candles should be respected. But whenever we look at it from a perspective of, kind of throw away all of the really crazy, like, oh, it has to be the last candle, this and that. Look at it from, a perspective of almost not common sense, but like logic. Okay, for instance, if we saw selling in this zone, we saw a price really move down a displacement. Now, there's multiple ways you can draw these supply zones and figure out where the orders are left behind in the market. Now, wicks, it's called fractal demand. For instance, if I draw this wick here on the 4 hour, if I go in on the 15-minute, I'm going to be able to find, order blocks, supply and demand zones, and maybe a more refined POI. And it goes back to, like I'm saying, like when we're looking for areas of supply, we're just looking for areas where there might be orders left within the market. Now, if we marked up this whole zone here, you can see price moves back up here. We clear out a lot of those orders. There's not going to be liquidity or orders left in areas prices already retraced through. So using a really huge zone of supply and demand, that can not only confuse you because you might think that you're doing things wrong whenever price, maybe it goes through it and then reverses, or maybe, you get your low time confirmation and price continues the upside. But really, it's all about just finding those zones that haven't been hit. So for instance, over here, if you look, we have this candle up here. I know this sounds crazy to say this might be this last candle, whatever. You can mark it. Now, maybe all of the orders weren't satisfied from this candle. This is where supply was originally introduced into the market. This is where this trend right here became bearish. It's the top, right? But you have to look at it from a perspective that it's more or less hedge funds, banks, financial institutions, whatever you want to call it, that are manipulating price. But the way that they're doing this is through algorithms. So, for instance, whenever we're playing supply and demand zones, whenever I say, oh, there's orders left here, well, think about it like this: when price reaches a zone where we see supply introduced, well, how is that happening? Why is price moving so violently away? Well, simply put, there was an inefficiency of supply and demand in this area, and supply overtook demand. And that's why price rushes to an area where there is demand. Price will return up. Now we'll see if this supply holds and is respected. And that's how you can get confirmation, the price, okay, now supply is in control of the market. Now, how do they create these inefficiencies? Well, algorithms are spamming orders, reading the order books. They're figuring out where there's liquidity enough to do so. And once they get to these areas, they're going to put orders in all over the place. Now, you may most of most of them may get filled, but a lot will be left in the market up. That's why we say there's supply left in the market here. Why? Because this was an area where they created enough liquidity to where they could place these orders. Why, once price reaches back up into this zone, there's not going to be, you're not going to always have filled every single order, because that's what we say we're mitigating. If you hear the people say mitigating, or there's orders left in this wick, that's what that means. Because I know it can kind of get cryptic when people talk about it, and you're like, you know, fuck it, I don't even need to know what it means. I'm just going to do the TA. But I think it's good to understand that. So when we're looking at identifying supply and demand zones, we want to look at what makes sense. Like, okay, are you going to say that this is your supply and demand zone? Because a lot of people just say, oh, institutional candles. For instance, it's already been filled. There's obviously no orders left there. So you can pair this with liquidity as well. You could say, okay, well, there's a lot of clean highs here, here, every high in the range practically. You have this one got cleared, but you get the picture. Because when we go back on that 4 hour, you have all of that liquidity we were talking about becoming, these stop losses for shorts. There's a lot of buy stops here. So you want to look at it from a perspective of not only market structure. So we have a bearish trend, right? We have a very clear, we're making lower lows and lower highs on a 4 hour chart. Now, you may use a daily or weekly, whatever it is, just use a high time frame to get your actual perspective on the market. This is going to be the framework for how you enter trades. And like I said before, you don't have to just trade one way. You can trade counter trend, but you have to do it with the perspective of the market, your bias, right? So this is how you build that bias. So the way I see it, on the 4 hour chart where market structure is bearish, right? We're engineering liquidity to the upside. We engineered up to the downside as well at first, but price came here, swept out that liquidity, gave us enough juice to go all the way up here. This is inducing retail liquidity. I've had people literally text me in the last couple of days about, Bitcoin, should I buy? Should I buy when it's up here? And that's kind of the goal of these scam pumps, and also to push back up to an area where there's enough liquidity for large institutions or whales, so to speak, to enter these trades to continue the trend. Because, like I said before, where was the most profitable area to get into trades here? It was at this top. This trend could be broken. You have to also, when you're building these biases, I have a lot of people that I work with that get really tripped up, and it's like you're like forced in that bias, like you're only bear, right? Now, whenever you develop that bias and your outlook and your sentiment, if you will, you trade with that sentiment. For instance, you're going to be a little bit more liberal when shorting in this kind of trend, and you're going to be more aggressive with your profit taking and conservative on entering counter trend trades. You're going to break even much sooner. You're going to have less of a target, because whenever we're trading with the trend, if you enter on a higher or on a lower high, for instance, like we're just looking at this, all of this is just one big market structure. Well, theoretically, if you enter up here, you're targeting the low down here, and obviously you target weak lows along the way, but that's how you trade it. Now, if you're on a 15-minute, for instance, if you got in up here, let's just say, let's use an old example. Let's say if here you were in a bull trend, you had made that higher high. Obviously we're making higher highs and lows here. Say if you entered here and you were playing the continuation, you took your profits here at the weak high. Because remember, what is a high's job? To make a new low. In this situation, your low was all the way down here. Did this high do its job? Certainly not. So we target it. Now it's the same thing on the high time frames. Whenever you're looking at things from a a high time frame perspective, if this high or if this low doesn't do its job and make a new high, well, then you look to get short and target that low. I think that this is a pretty exaggerated move away from this supply up here. We got very close to breaking out of this 32,650. The high over here, I think that's what it is on. It's 32,658 on USDT, but perps it's 32,650. Regardless, we got close to that strong high and we saw a violent reaction from it. So if I'm looking at this from my high time frame perspective, which right now is bearish, because I can't make myself bullish until we're bullish on the high time frames. So I'm looking more for shorts. Now, does that mean just short anywhere? Absolutely not. I'm in longs right now. So I know it's like backwards to some people, like, oh, well, how are you bearish on the high time frames, but you're looking for or you're longing? Well, you can play these retracements. Is the low we made a higher low? I'm not sure which one you're referring to. You mean like just any of this low? I mean, remember, you could say it's an internal low. Yeah, sure. But is this this can't be a higher low? What confirms a low? A new high. When we're talking about swing structure, everything within this is just internal structure. So all of these highs and lows, they're just internal structure. It's not your swing structure. That's not your overall trend. Now, does the 4 hour shift bullish and shift back bearish multiple times here? Now, the immediate bias does. So for instance, if we're using internal structure, let's look here. So, we've talked a little bit about mapping internal structure before, but it's the same concept as swing structure, except on an internal basis. So for instance, we have a candle that the, the candle after it breaks its high. Well, what did this low do? It made a new high, right? So now we look for a pullback. So we can say, okay, well, this candle didn't break the high, but it also didn't break this low. This is actually going to be a weird example. I'm going to go to a 15-minute, make it a little easier. Let's do it like this. This will be a good example. So, for instance, we had this candle right here. Start here. This candle right here made new highs, right? Now it came up, we had a pullback. Now, did this candle right here, a lot of people, this is where they get tripped up. They're going to say this is the high. Well, did this candle make a new low after it? It didn't. So that's not a high on an internal basis. So what's the high? Right here. So now we have our low and high. So price comes down. Each candle is breaking the previous candle's low until when? Till right here. But is this your low? No. Why? Because this candle didn't break its high. Now this is going to be the beginning of a pullback here. So then what candle started? It seemed like you had a low here. I don't know how this price action unplayed. Like, this could have been made and then we came and cleared it. We're looking in hindsight, but theoretically you may have had a low here and a new high, and then you had this low right here at this this inside bar. And why is this the low? Well, because the next candle broke its high. It did its job. So that's your new low. Now, it's not the same as swing structure, because you're probably wondering, well, how is this the low? Because like what you just asked, this goes to like, is that one high or the low a high or low? Maybe on an internal basis, you could look at it like that, but not from a swing structure perspective. So here we push up. Okay, what candle makes this candle right here makes a lower low than this candle? So that makes us a high right there. So then what happens here? This candle causes the next candle to break through its high, so that's a low. And you can continuously do this. And you may be wondering, well, what the fuck does this help me? Like, why do I need to know all that? Let's just look over here. So whenever we're talking about changes of character, you can use swing structure, and you can say, a change from a bullish swing structure to a bearish swing structure is a change of character. Or, we got to remember price is fractal. So for instance, a change of internal structure on the 4 hour is often a change of swing structure on the 15-minute. a change of internal structure on the 15-minute is often a change of swing structure on the 1 minute. Because remember, when we're looking at price, when we're looking at these candles, every one of these 15-minute candles, could be a whole trading range in the 1 minute. You have 15 candles in there. So whenever one candle forms a low and that low is taken, most likely that's a change in swing structure in the low time frames. So how can we use this to our advantage? Well, say you're looking at price for it to begin a pullback. Now, how are we going to determine a pullback? Well, we're going to see a change of character. Now, a change of character on the internal structure is going to show you something that's happening before it happens on swing structure. This is a great example actually. So for instance, we had, let's see, we had a low here and you made a high. Then right here, you made a low. Then you made a high. So you were bullish here. If we go back here, you're going to be making higher highs, higher lows. And then what happened? That low. Now you have seen supply become introduced to the market. So now you have had a bearish change of internal structure on the 15-minute. Now on the 1 minute, let's go back and see. What was your 1 minute swing structure? It's not going to be the exact same as the internal highs and lows, but we can see right here was our swing, right here our swing low and our swing high. So what happened right here? Maybe not right at this line, but in this price leg, price broke that low, and now we've shifted swing structure on the 1 minute. But we could tell and see this just by using the 15-minute. So when we pair these internal changes of character with maybe a high time frame POI, you could potentially look to go short. Now you have to use your high time frame bias. Am I going to do this if the high time frame is extremely bullish? Probably not. But if I'm trading with the trend, we're in a premium, and we see a shift in internal structure in a high time frame POI, we can say that new supply is being introduced to the market. So if we look here, now you can get more confirmation. Just like we have the double confirmation entries, you can wait until this happens twice. Now, we don't want to just use any internal structure being broken again in order to confirm that the supply is being respected. Now, what we can do is we identify where the supply is. Oftentimes, you can use the entire range here. I know that we were just going over high time frame supply zones and why you want to refine them, and you can do that here. That may be your style, but I've found that you can see, you can read the story that price is telling you without having to refine maybe to this candle. So you could say, you could use the institutional candle. You could use the whole range, right? Now we see over here, what does price do when it comes up into the zone? We see another change. Now, the important thing to understand here is we're not looking for just the first low to be broken. That doesn't confirm it for us. What we need is to identify the demand that pushed us up into this area. Now, you may view it as this right here, or you may view it as this candle down here. This, however you draw supply and demand here. Again, it's personal preference. I recommend using the low because when we're looking at price and we're trying to develop a true understanding of it, we want to see where to price pivot, because that's where demand was introduced. What stopped us from falling? Demand. Of course, right here we can say, well, there's this demand pushed us up into it. But the way I looked at it, you want to see where new demand is introduced. Maybe it's an area of old demand, but we still have demand in this zone to push us back up to the supply. Now, for me, I would have drawn these last couple candles right here. Specifically map them out. These last down candles. That's going to be, or you could get fractal. You could say the wick. It's totally up to you. But when I look at it, I'm not even really looking at the zone as much. I'm just looking at the low. So once this low is taken, this can confirm to you that supply is now in control. So where was the new supply introduced to push us away from this zone? You could use the institutional candle, however you do it. I like inside bars because remember, an inside bar is just a zone on the 1 minute if we're using an inside bar on the 15-minute. An inside bar in the 4 hour is going to be a zone on the 15-minute. So especially when you're using high time frame supply and demand, it's really good to use inside bars. Go back and back test it. It works much better than trying to use a whole zone or maybe a huge institutional candle. So now We see price come back up into that supply, and you can see that that's where we really reacted from. And what sucks is, a lot of times, like for me personally, I would have rather seen a change in swing structure, and price, instead of doing what it did, we'll say price, broke down. It maybe came down into this demand and then continued back to the upside, back to that newly introduced supply, and then gave us that entry. And that's going to be a more conservative, safer bet a lot of times. But you can see that internal structure, when paired with other confluences, can work, because that's kind of what I'm reflecting on looking back at Bitcoin, completely tanking from here. It's like, okay, well, how could you caught that? I know some other people have gone over it too, um, but that's the way you can use that internal structure. I know I kind of just went on a tangent from you asking me if if the this high or low was low or not, but I hope that helped with that question. That yes, it probably was an internal low, but does that shift the overall trend of the market? No. So you could say, when we're in a 4-hour bear trend and price is coming down, well, how, once we get that break of structure, we can expect a retracement. How can we determine when that retracement is starting? Well, you can, look for that change of character. So for here, let's see, you made, obviously up here you had a high, and I use inside bars, like I've said before. Like, this candle's not your high, neither is this one. Well, this one was a high, but then what happened? You had a pullback. So what candle broke the previous candle's um, low? Hold on, I'm gonna look what you tagged me in. Let me go to where is it? Crypto chat. Or is it in crypto chat? I got the alert. Oh no, it's in the chat. Hold on one second. How does this work on high time frames? It's the exact same. Remember, price is the same. Price action is price action. It's, now, is this going to work differently on a 4-hour than maybe a 1 minute? Of course. You have to understand that, but I want you to approach, price action with the perspective that all you're doing is identifying market structure, and market structure is relevant across all time frames. That's why it's important to align yourself whenever you're taking, maybe a swing trade. You want to make sure all of the time frames have shifted bearish. Now, how can you do that? Well, you can see when a 15-minute shifting bearish by using the 4-hour. You can see when the 15 minutes shifting bearish by using the internal structure in the 15-minute. Somebody said, "Can I explain inside bars?" All it is a bar that did not break the previous candle's high or low. So it's inside that candle. So what is an inside bar in a low time frame? It's going to be a trading range. This was a whole range. Why? Because you're ranging between a high and a low. So for instance, if you see a violent expansion right after an inside bar, you could say that that was the range that we, really pushed down from. For instance, up here, instead of using both this like a lot of people say the last up candle and the inside bar, it doesn't matter what color candle it is. That's why it's good to have them a different color. I have them white with this indicator, because this doesn't matter if this is a down or up candle. It doesn't matter. What matters is that when you are looking at a new introduction of supply or demand, you have to have a range. Now, whether that's on a 1 minute, a 15-second, whatever, you have to have a range, because there has to be an equilibrium that price pushes away from. That is how you create an inefficiency between supply and demand. That is why price is delivered at different prices. So, in order to have an inefficiency, uh, price must first find equilibrium. So that's why you see, whenever you go on a lot of high time frame ranges, let's go back. Let's think back here. Where did price really start to expand from? It's usually around equilibrium. Now you can go on a 15-minute. For those of you I've worked with, you guys know this. We've gone over equilibrium in depth. But equilibrium, aka the 0.5 fib, is just a fair market value for the range that you are trading within. That's that's the fair market value. We won't get into premium and discount right now, but the important takeaway I want you to have from this is that there had to be, on some range, there had to be a fair market value established in order for there to be an inefficiency between supply and demand. So whenever you're looking at new supply or new demand introduction, you want to look at ranges. So if you see an inside bar, oftentimes that's where you're going to be able to find that refined zone. Now, if you want, you can go crazy with it. I don't necessarily always recommend this because you may not get the right zone. But you look here, where did the selling really start that hasn't been tapped into? It's easy. It's right there. Very easy. Hit 3 inside bars. Now, if we could go on a 15-second, you could really, but you can see the price really once it hits into this. Actually, it's up here. It looks like no, it's this candle right here. See, that's why going on the 1 minute, it's you can maybe call. I would have said this one, but you can maybe refine it. But that's why the inside bars are really good because you can actually just mark the whole bar, and now you've got your range where that inefficiency was created. So that's one big takeaway that I want you guys to have is you can use internal structure when paired with other confluences to develop a trade idea. Now, does every single change of character matter? Absolutely not. It's more or less, you have to pair it with maybe you're above an old high, you've swept liquidity, maybe you're in a POI, maybe you've done both. That'd be the most ideal situation. So, um, yeah, to answer that question of inside bars, I hope that made sense. And then also for Crawlsley, it works the same on high time frames. Just understand anything that you learn is going to work on all time frames. Now, of course, the higher time frames are going to have more relevance and more power, but a break of structure is a break of structure. A change of character is a change of character. Now, you don't want to use solely a 15-minute, change of character to say we're bullish on a 4 hour, obviously, right? Um, but you can use them to maybe say we're starting to pull back, to give you confidence to enter a trade, this and that. But you want to make sure that you're doing time analysis across all time frames. Also, Timmy, the inside bar indicator. If you just type in inside bar, it's the one by has this dude has like ABD is the beginning. That's the one I used. Inside bar V2. I don't know why anyone would want that one. But yeah, I think it's best to use that one because it makes inside bars their own color. It kind of will drown out you wondering if it's a down or up candle. I'm actually, let's see what this one was. See, it was a down candle. Those of you who are, use like order block theory in itself, you may have even used this candle. But it's, order blocks are great, but using them without developing an understanding of what you're looking at can be more detrimental to your trading than good, because whenever you're using a tool, you need to understand what it's doing and why it's doing it in order to get the full potential out of it. But so for general outlook right now, do I see us pumping back up here? Honestly, with NFP tomorrow, how it's set to go, how the dollar looks, I could see that. That's why I don't want you to rush crazy into shorts. Where we're at. You have to take into account everything that's going on. You don't want to just be, you know, all one way or the other. Just because we're bearish in the high time frames doesn't mean we're gonna, short from anywhere in this range. Remember, especially where we're at now. Let's see if we're in a discount or not. No, it's not yet. But even when we're bearish in the high time frames, does that mean we're just going to short as soon as price comes up here? Well, I'm not. Maybe you do. I don't recommend that. You want to wait for that confirmation because, like I said before, you have to see things from both perspectives. Like, am I bearish because of logic with price action and market structure? Yes, but do I also take into account the opposing narrative? Like, you have to look at it like that. Now you can't trade off that. Like, I see. Okay, well, we've swept a ton of liquidity. We've swept out everything down here, all these lows. Ethereum swept its lows. You know, maybe this is accumulation. This is phase B. Maybe, but I'm not going to go off maybe until it's confirmed. You also have to look at it from the daily range. So on the daily range, the swing structure is much different. Now, you could look at it like here is your high and here is your low. Because I mean, this is questionable for me. So you could say that, here is your high, pull back, then your low. I see that. I mean, that's a pretty decent size pullback. Let's see. You've got like a 10% pullback. You can also go back and see, what are these pullbacks usually on Bitcoin. So for instance here, when you saw this was your new high, this was your low, what did price do? It came up here, broke that high, pullback. And let's just see how high, how much was this pullback? Okay, it's around 10%. You could say that, these pullbacks oftentimes are going to be around that same percentage. So you could possibly draw this as a pullback. So if we use this swing structure right here, and also if you look, another way that I like to do it for extra confluence when you're using the high time frames is look how newly introduced supply was reacted to. Was it respected here? Like, did this look like a pullback? Bam, made that lower high, reacted violently. So to me, I'm looking at this right here as the daily range. So when you look at the daily range, you could say, okay, well, we are in a um, discount. At some point, price should come back up into this premium. When we're looking at the daily range, maybe where to? Maybe optimal trade entry. Maybe this newly introduced supply somewhere up in this candle. Now if we break above this high and get a closure, that's where I'm looking for price to go, around 37 to 40K. But do I think that will happen? I can't make myself think that until we close a 4-hour candle above this. And that's whenever the high time frame that I use is bullish. And it's that simple. You know, um, if you long from here and you have that high time frame target, you think we're going up here, that's all up to you. But the way I see it, um, I cannot make myself bullish until the high time frame that I use to trade with and I use to base my bias off of switches. So that's kind of where I'm at with it right now. If anything, I'm looking for price to return up to here, maybe with NFPs tomorrow, especially if the dollar is just absolutely dies. And then we might look to position ourselves short. But it's all a reaction game. It's not prediction. That's why I hate when people are like, "What is Bitcoin going to be at the end of the year?" It's like you don't know. It's, when will Bitcoin go to all time high? Are we going to all time high this year? You can speculate and say, well, like, no, I don't think so because the economy's shit. Wait, what do you say? Yeah, you know what I'm saying? Like shit, like that would make more sense because it's like, but I still don't even know that. Like, I just know where, Yeah, bro, it doubles it. I saw a meme last night that said it doubles. Oh, what's up, Scorpion? Oh, I agree. I agree. Yeah, it's like, you know, yeah, no, I was talking about that. Yeah, it's the lowest increase in payroll since the entire pandemic. Jesus. Yeah, right. Amazon's, yeah. Dude, hell yeah. Shit is crazy how ugly this shit is, bro. Like, fuck. Yeah, Netflix and Amazon look like shit coins. Where's NF? Yeah, look like shit coins, bro. This one right here is CI or yeah. Luna. It's Luna, bro. Not as bad. What was this company? They used to. What did that HBRM should ever do that everyone used to trade? Holy shit, this HBRM got fucking annihilated, bro. It looks like Luna's chart. That's like ICP. ICP is another one like that. Holy shit, how much? Oh, it's $9. Pretty. Look at these fibs. JMIA. Sheesh. Mm-hmm. Bro, euro dollar. And so sus, bro. Yeah, I can see it for sure. Yeah, I'd look in this candle more than. It's weird because, well, I'm just interested to see how the NFPs tomorrow affect this because it's like both economies are fucked. The euro is probably more fucked, right? I'm pretty sure their inflation is like fucking, um, it's like insane. It's like not even real. Yeah, yeah. I don't think so. Jesus Christ. Got you. Oh shit, my shit's way back. I was like, where is it? Okay. Yeah, that's it's like .com and good old '08. Yeah, that's another thing too. Like, yeah, yeah. I hate to compare the two things because like here's the way that I look at it too. Like, okay, we had the .com crash, right? Now everybody loves crypto. I love crypto. I really do. I think that a lot of it's still total bullshit, but I think a lot of it is going to really, change a lot of things. I mean, it already has. Like, I think that there's a valid use case for, Ethereum. I mean, get me wrong. Don't get me wrong. I don't. A lot of these coins are straight Ponzi bullshit, 100%. But you know, I do believe that you know it is. Um, it is going to be around. Crypto's not just gone. It could go to whatever price. I don't think that Bitcoin's just gone. I don't. I don't think that that's going to happen. But let's look at the internet when the internet came out. Now, a lot of people compare crypto with the internet, right? Like the amount of innovation. Now, obviously, the internet was probably not probably definitely more impactful. But we look at it like, did the internet rise to a point where everybody was euphoric, everybody was insanely bullish, everything was crazy? It's a new time, a crazy time to be alive. Really, much crazier than crypto, in my opinion. You saw that, and then you saw that huge blow off top, where shit had to find its true intrinsic value. Tons of companies were just worthless now, and the ones that weren't, are some of the biggest companies in the world today. So when we look at crypto, what happened with 2020 and really all of stocks. We had this euphoric, insane rush up. Companies are adopting it. Everybody, Tesla's buying Bitcoin. You got Michael Saylor who's like bet his whole fucking company on Bitcoin. You got all this crazy euphoria for this new industry that's very innovative and is going to disrupt a lot of other businesses, also like the internet. But everything has to have its fall to its intrinsic value. So, who knows? Maybe this was it. I don't know. Maybe this was that, but I don't know. Looking at the weekly chart on Bitcoin, I think we have a lot of room we could run down. I think with the general state of the economy, that's also um, an accessory to that bias of a bearish narrative on Bitcoin. We have market structure. Um, now again, all that can change in the weekly chart. Really looking at the weekly, and I know JL's looked at this as well. If you look at this, like if I'm not looking at a weekly, if I'm just like I'm just looking at just this. I don't know what chart it is. I don't know what time frame. I'm going to tell you like, okay, this looks like distribution. Once price comes back up in this zone up here, I'd be looking to short. This is the crypto market. I know it's not Bitcoin, but let's do this on Bitcoin just to. I'm looking at this like, okay, when price comes up in this zone, I'm looking to short somewhere in here. You know, maybe even the whole zone, whatever. I'm on a weekly, but if I didn't know, I'm just looking. I'm like, okay, well, once we're in here, we're in that supply zone. You'd look to short and take out the lows, but that would mean the price is going to retrace a little bit. So that's why I can see like the bullish narrative here. Like people are trying to, the Wyckoff perspective. But here's the only thing that I personally, the reason I don't really use Wyckoff or because you can't really like confirm it. Now there are people that are very good at it and that are right a lot of the time, but for me personally, all I want to mess with very strict, specific, machine learnable strategies. Like for instance, to me, it's very simple: lower lows, lower highs, bearish. I'm not looking at like I see. Oh, this could be just a draw liquidity to exhaust retail. Yada yada. I get it. We have to hop across the creek. I get it. You know what I'm saying? But until that's confirmed, I'm not going to trade off of it. Would I love that to happen? Hell yeah. I'd love for crypto to come up and me be able to sell some of my fucking dying equity. That'd be awesome. But as a trader, I look at it for what it is right now, and I'm not going to predict. I'm going to react once things happen. So that's really it on my sentiment. I mean, it's probably not much of a surprise to most of you. With that being said, though, I think that depending on this NFP tomorrow, I think we might see a little bit of a pump, and that would also go with the objective of getting back up into these supply zones. But I wouldn't recommend trading like crazy during the NFP, especially if you're trading forex. And most of you guys are trading crypto, but just let it play out. Be mindful of the events that can affect whatever market it is that you're trading. I haven't even looked at the YouTube comments. Okay, there's not many. He said they're hiring new McDonald's. Did you see that video of that Popeyes manager that like freaking like duffed his employee for like trying to go home? I just saw that like literally before I got on stream. It was all over social media. He like knocked out this person. They're like a 16-year-old that worked for him. It's like, bro, yeah, fucking Popeyes. Actually, look at a couple coins on this watch list I had. Yeah, TRX. I want to watch once we come up to this area. I still have alerts set there. Did you ever take those GMT longs, Algo? I took them. Oh, that sucks. I took them, but I was super like, I'm glad too. I was like, so like, just I was like, I was skeptical, not speculative, but I was like, it came down here. We came to that POI that we had, and like, this was like the most aggressive. So like, look, we formed, we came to that POI, and then right here for me, this was our internal break of structure. So we had high, high, high pullback. This was the high because it made a new low. You broke that. Now, where was your supply that sent you back into this zone. Price came up here. This candle came back down and then broke. So for me at that point, obviously you could have waited. It would have been like a fucking, tiny difference. This is like, I mean, I guess I shouldn't say anything's a tiny difference, whatever. But I just entered, but I was like, I'm not using the 15-minute targets because the 15 minutes bearish as fuck. But I thought I sniped it too. I took it right here. I was like, oh hell yeah, it's a snipe. And then it started to run, and now I'm just now looking at it. It definitely tanked, so that's good. I was kind of like, holy shit, fuck! I just fucking paper handed that shit. It's funny how fucking you know price action is price action. Like this is literally a coin people get paid to fucking run with NFT. Their shoes they bought with an NFT, and SMC still works on it. Like what the fuck? Johnny, you said Bitcoin equal lows. Um, so we've got, which one are they actually equal? So this is, what is that, 29,301. So it cleared them. So theoretically, you cleared that liquidity, you swept it. If this is what you're talking about, but you can still view them as relatively equal lows. Maybe it didn't on all feeds. I mean, theoretically, the liquidity has been swept, but I still look at that as, if I'm shorting from up here, I'm definitely trimming heavily right there. Personally, that would be like the first target really. But when you're looking at equal lows, you're looking at areas of liquidity. So there's the argument, okay, well, we swept it. There's no more liquidity there. But I also look at it like tons of retail stop losses are right here. They're like, this is the bottom. This is support. Everybody's like, this is our support zone now. That's what retail's doing. So I still view it as a pretty clear area of liquidity. But you also have more equal lows. I think it was down in here. I know these are pretty right next to each other. You have more equal lows there, fair value gaps. I think this is not going to be like the bottom. I think that this is just where we came down. We tagged enough fuel in order to go back up to mitigate. Like if you're saying if you trim and you instead of just holding the entire way. Well, yeah, of course. I mean, if you just hold your profit to full TP, but um, you know, now if you're trading with the trend, like for instance, if you're trading with the 4-hour trend and you enter all the way up here, I mean, you can hold it all the way down here if you want. That's up to you. But like, if you get a really good stop loss, like we're getting like percent to 0.5% stop losses. We'll just say 1%. I mean, like it's 15 to 1. It's nothing absolutely insane to just hold through, I guess. But for me, if I don't trim at targets, I'm definitely taking some off to de-risk myself at like 4R, 3R, somewhere around there. That's just my policy. Everybody's different. That your trade management's totally up to you, but that's what you would target. Would be here. Now you could take profits at weak lows along the way. In my experience, taking partials on swing trades is good. And if you're trading like scalps, sometimes it's better to hold till full profit if you're trading with the trend. Now, if you're trading against the trend, you always take profits in partials. Or I do. But your logic is correct. Like idealistically, yes, you hold the entire way, and get the most profit here. But what happens to a lot of people is they get in the trade here, and this is what happens to them. So price will go uh, they'll get in the trade, price goes down, it hits the target, and then it does this. They're like, oh my God, fuck. And they take profits when in reality, all price was doing was what it does best. It's just following order flow. It's just coming up because if you enter at the right area, there's going to be new supply introduced, right? At your entry or right after it. So price is going to come back to break even a lot of times. But people don't trim here. It comes up, they're like, fuck, I should have taken it. And then what happens? Then price goes all the way down here. So you just got to know yourself as a trader. Um, I like to take profits along the way on swing trades. Like if I'm trading a whole 4-hour range, I'm not going to trim all my profits early, but I'll take like 30% at 3R or 25% at 4R. Then clear at the most very equal target, like might be right here, one of these lows, and then hold the rest to the end. That's how I would attack that. Yeah. You don't want to. There's a balance. There's a healthy balance. So are we looking for shorts over longs right now? Um, I mean, I'm in longs personally right now. Like these are just a runner, and then I'm guessing ETH hit the target, so I'm not in ETH if it did. Did it hit it? It's not yet. So I mean, I took these longs, but for instance, I'm not looking for shorts where we're at. Personally, I want us to come up. Maybe I see a reaction here. Maybe I see these highs get swept, and this 15-minute supply is strong. Maybe it's up here. I'm looking at all these POIs because the way I look at it, we're in a bearish trend. Do we have to necessarily? Is it required that Bitcoin comes up to this top level? Absolutely fucking not. For any of you who've been trading Bitcoin for a while, you know that's not always a thing. But idealistically, I wanted to come in a premium, but that's also not required. Especially whenever you have these relatively equal lows here, then this low that didn't clear them. I can say, once price comes up here, we're bearish on all time frames. I can look for to go short to this liquidity target. But that's all depending on the person. But I'd be looking for shorts, at every different supply zone. I'm not just gonna take them, you know, but you can watch for shorts. Glacier. But yeah, so that's kind of where I'm at with everything. I think NFPs could definitely give us a pump tomorrow. Glacier. But yeah. So I guess that kind of wraps it up. If you guys have any questions or want me to go over anything, um, then just ask me now. Forever hold your peace till tomorrow, at least. Forever hold your peace. I know that's the thing is like people. I feel like, yeah. I said non-fungible payment. Yeah, no, I agree. I think it's moving more and more and more towards it, but it's like honestly, it's like once you get acclimated with these concepts, and then you start looking at like euro dollar or SPY, you'll be like, fuck this shit. Like crypto is fun to trade though. Like I love trading crypto. It's really volatile, but like in all honesty, people talk shit like, oh, forex is hard to trade. It's like, well, I mean, yeah, if you don't know you know these kind of concepts, but it's so, yeah, exactly, it's like fucking easy, bro. It's like what you want to see. Like Bitcoin's probably one of the harder assets to trade in my opinion, especially using low time frames because it's so choppy. Somebody ask a question so Casper can keep streaming. Same. Well, I have a tiny runner. Hell yeah. I have a tiny little runner. Fuck yes. Define. Hell yeah. Actually, I'm gonna go grab my iPad really quick to see what I'm up. Hold on. Fuck yes. ETH hit full TP. Little baby runner is running on Bitcoin, so that's always nice. Yeah, me and Hood both fucking because I saw Hood in the other thing, and he was like, I saw him had the same entries I did. I was like, I know he did the same thing, but he was using that 1 minute internal, and it was like super risky. But I was like, okay, we just swept this liquidity. We hit this, also hit into this sweep zone, and I started to see price reverse in the 1 minute, and I was like, I just kind of took it. I wish I'd have taken a higher target, but I mean, I just targeted. I looked at this M15 supply and I refined it down to 1 minute to where I saw the clearest area of supply with inefficiency. I just targeted. I was like, fuck it. I took like everything almost there. Oh, you yeah, taking on that shit. How so? Like, how are the spread? Because you can't even really trade the low time frames with Bitcoin on those prop firms, can you? Like under M15, or even even just like because I remember when I used to. Oh, that's fucking yeah. Prosperity for just Bitcoin is fire. That's the only thing I've ever really used MT for extensively was Prosperity, and that shit was so nice. It's like, bro, you literally, the only thing you just can't trade like the M1 and shit, but you can trade the M15 with that. Like that's um, sometimes you can, sometimes you can't. But that's one thing about like crypto and using like MT4, like the way I trade now, I wouldn't even be able to do it. Literally, wouldn't even be able to do it. Side left. Sheesh. Probably like 64,000, if I had to guess. Bitcoin always doubles every year. So I mean, like we could go up or we could go down. So could be anywhere between like 0 and like 100,000. But that's just based off some different kind of analysis. You know what I mean? Yeah. If we get a closure right here, I'd say the M15 is bullish, which we're most likely going to, like above this. And I guess really, I told myself I'm going to start mapping 15-minute structure with just wicks on crypto because I've gotten faked out waiting for closes more than it helps. Close on the 4 hour, but 15 minutes. I'd say now, you have that first confirmation, which you're going against the high time frame trend. So to really confirm, you'd need to make a new, higher low and higher high. But at that point, you're going to be up in the sell zone. One could maybe look for longs tomorrow. But another thing I want to start doing too, which I'll probably end up streaming at some point, but I know a lot of people won't even catch it. But really backtesting Bitcoin on ETH, like to trading the London or not the London, the New York kill zone, like 7 to like 8:30. Really, it's technically 7 to 9, but with crypto, I haven't done a shitload of backtesting, but a good like 2 hours worth on ETH, all the way back to like 20 or like mid 2021. Dude, you literally see this very similar model like 3 to 5 days out, or 3 out of 5 days of the week, like the trading week, Monday through Friday, between 7 and 8:30. You'll see price come to a M15 supply or demand, 1 minute confirmation, and then it's like it moves because like that's when all the volume's at. Because a lot of people don't like. I feel like a lot of the forex gurus or whatever, they try to make like sessions like super complicated, but it's like, okay, think of it like this: Tokyo, you're going to consolidate. London, you're going to see expansion. In New York, you're going to see a retracement, and then a possible another. It's pretty simple, but you know, really all it is the kill zones. You're going to see that those stop raids occur during that time, and then heavy volatility. So it's like you're going to be able to get into trades at those pivot points, and also trades that, if you execute them right, kind of just take off. You don't have to really worry about it, and you can, like for instance, um, like this morning, I think Flow hit a similar trade, but here actually you could almost look for shorts, but I'm not going to trade right now. I already hit my goal, so I'll watch out, see how it plays out though. That's another thing I recommend you guys do. Don't only back test, but forward test. Like this right here. Like I'm gonna watch it. We're in the M15 supply. Okay, here's your pretty clear low. So it's like you could break that. Do that same thing we are talking about before you break it. Reintroduce demand. Come back up to the newly introduced supply and see if we can overtake the demand. Play that supply, second supply. I'm not gonna play this for main reason right now. It's pretty like a dead zone. You don't want to enter trades here because what happens a lot of times, it depending on your perspective, but a lot of times Tokyo will range, and then the lows or the highs are going to get cleared, and you really don't know which one. You can have a bias, but I don't want to enter an M1 execution, during that time. So you got that internal market structure break. We'll see where demand's introduced. Comes back up probably into this. You could use the whole range. Personally, I'll look at the inside bar because I'm forward testing. Because maybe if I was trading, I might be a little more aggressive because I've been just trading the last candle or even the whole range sometimes. Once if we can push up into it. But let's see, because being patient a lot of times will get you that better entry. And when you're trading the lower time frames, entering here with this stop loss, and this, that's triple the amount of money you're gonna make. We have 0.3% stop loss compared to, actually, no, I should say twice as much money because you're gonna have twice as big of a position size while risking the same amount. So yeah, I'll see how this plays out. I'm gonna hop off here. I'll look later. If you guys gonna want to go watch specifically what I'd be looking for, basically what I was going over earlier, you'd want to see somewhere, find a bottom, create that new demand, come here, and then break that demand, and you would look for price to come up and react off that newly introduced supply. But I would recommend just forward test it. Don't trade it. Just kind of sit and chill and watch. But anyways, guys, as always, I appreciate you all. I'll be on here tomorrow around 5. I might even hop on during the day. I'm not sure, but yeah. Until then, I'll talk to you guys later. Peace.